Welcome back to the channel. The blockchain industry is entering one of the most competitive phases we've seen in years. After the chaos of the previous market cycle, developers and investors are now focused on one thing above everything else: performance. Every new Layer 1 chain claims it can solve the scalability problem, but the reality is that most of these networks are still battling the same bottlenecks that have existed for years. Congestion, slow execution speeds, and inefficient hardware utilization continue to limit how far these systems can scale. But in the middle of this technological arms race, one project is rapidly gaining attention for taking a fundamentally different approach to the problem. Monad is emerging as a serious disruptor in the Layer 1 landscape, and today we're going to break down why many analysts believe this architecture could redefine the performance limits of blockchain infrastructure. This is not financial advice. Please do your own research before making any decision. The era of legacy blockchain bottlenecks may finally be coming to an end. While most networks are still trying to squeeze more performance out of outdated sequential processing models, Monad is attacking the problem from a completely different angle. Instead of forcing execution and consensus to operate as a single process, the system decouples them entirely. This architectural shift allows the network to process transactions in parallel, dramatically increasing throughput while still maintaining compatibility with the Ethereum virtual machine. In simple terms, Monad is attempting to combine the speed advantages of a high-performance execution engine with the security and developer familiarity of Ethereum's ecosystem. That combination alone is why many investors are starting to pay close attention. To understand why this approach matters, we first need to examine the limitations of traditional blockchain architecture. Most early Layer 1 networks process transactions sequentially. That means each transaction must be verified and executed one after the other. While this design improves security and simplifies validation, it also creates a massive throughput bottleneck. As network demand increases, the system becomes congested, transaction fees rise, and performance begins to degrade. This is exactly what we've seen during previous bull markets when popular networks became overloaded with activity. High-frequency trading, decentralized finance, and complex smart contracts push these systems to their limits, revealing the structural weaknesses of sequential processing. Monad's design attempts to break through that ceiling by introducing a superscalar pipeline architecture. In traditional computing, superscalar processing allows a CPU to execute multiple instructions simultaneously by using parallel execution units. Monad applies a similar philosophy to blockchain execution. Instead of waiting for one transaction to complete before starting the next, the network distributes multiple operations across different execution paths at the same time. The result is dramatically improved hardware efficiency. Every available processing resource is actively working instead of sitting idle while waiting for the next transaction in line. Another key element of this system is the separation between execution and consensus. In many existing blockchains, these two processes are tightly linked. Validators must agree on the state of the network before transactions can be finalized. While this ensures security, it also slows down the entire system. Monad decouples these processes so that execution can continue independently while consensus finalizes the results in parallel. This asynchronous structure allows the network to maintain high throughput even during periods of heavy congestion. The system continues processing transactions instead of waiting for every step of consensus to complete. One of the most interesting components supporting this architecture is a specialized storage layer known as MonadDB. Storage bottlenecks are often overlooked when discussing blockchain scalability, but they are one of the biggest obstacles to high-performance execution. When thousands of transactions are interacting with smart contracts simultaneously, the database layer must be able to handle extremely high read and write speeds. If the storage system cannot keep up with the execution engine, the entire network slows down. MonadDB is designed specifically to eliminate this limitation by optimizing how state changes are stored and accessed. By improving database efficiency, the system can sustain higher transaction throughput without compromising reliability. These architectural improvements are what allow Monad to target performance levels of around 10,000 transactions per second while maintaining compatibility with the Ethereum virtual machine. That compatibility is extremely important. Many high-performance chains have attempted to scale by abandoning the Ethereum ecosystem entirely, forcing developers to learn new programming environments. Monad takes a different approach by keeping EVM compatibility intact. This means developers can migrate existing decentralized applications without rewriting their entire codebase. The result is a much smoother onboarding process for projects that want better performance without abandoning Ethereum's massive developer community. When we compare this design to competing Layer 1 networks, the differences become even more interesting. Several chains are experimenting with parallel execution, but many rely on optimistic models that attempt to process transactions simultaneously and then resolve conflicts afterward. This approach can work under ideal conditions, but it introduces complexity when multiple transactions interact with the same data. Monad instead focuses on deterministic execution, meaning the system can predict and organize transaction ordering in advance. By managing parallel operations more precisely, the network reduces the number of conflicts that require reprocessing. Benchmarking these systems during periods of heavy activity provides valuable insight into how they perform under real-world stress. During extreme congestion, networks often experience rising gas costs and declining efficiency. Early data from high-performance test environments suggests that Monad maintains significantly more stable gas consumption even when transaction demand increases dramatically. This consistency is extremely important for decentralized finance platforms and automated trading systems that depend on predictable execution costs. But technology alone is not enough to determine the success of a blockchain ecosystem. The real power of any network comes from the developers building applications on top of it. Over the past year, the blockchain industry has witnessed a noticeable migration of talent toward high-performance infrastructure projects. Engineers who previously worked on large financial platforms, high-frequency trading systems, and major technology companies are now exploring opportunities within the crypto ecosystem. Monad has been particularly aggressive in attracting this talent pool, bringing in experienced developers who understand how to design systems capable of operating at massive scale. This influx of human capital is creating a powerful network effect. When skilled engineers begin building tools, frameworks, and decentralized applications within a new ecosystem, it accelerates the rate of innovation. New projects attract more users, which in turn attract more developers. Over time, this cycle can transform a promising technology platform into a dominant infrastructure layer for an entire industry. Many analysts believe this is exactly the dynamic that could propel Monad into a leadership position among next-generation Layer 1 chains. We are already beginning to see the early stages of this ecosystem expansion. Several decentralized finance platforms and infrastructure providers are exploring migration paths toward high-performance execution environments that can support more complex financial applications. Applications that previously struggled with congestion on older networks now have the opportunity to operate in an environment designed for significantly higher throughput. If this trend continues, the ecosystem built around Monad could expand rapidly during the next phase of market growth. From an investment perspective, the long-term value of a blockchain network is closely tied to its economic design. Supply dynamics, staking incentives, and token distribution mechanisms all influence how value flows through the ecosystem. Networks that successfully balance these elements often create powerful incentives for long-term participation. As adoption increases, demand for the native asset grows while staking mechanisms reduce the circulating supply available for trading. This combination can produce strong price momentum during periods of rising network activity. Another factor investors are watching closely is the roadmap for future protocol upgrades. High-performance blockchain systems must constantly evolve to remain competitive as new technologies emerge. Upcoming upgrades designed to improve modular liquidity integration and cross-chain interoperability could significantly expand the role of high-throughput execution layers within the broader crypto economy. If Monad successfully captures a large share of this infrastructure market, it could become a foundational backbone supporting many different decentralized applications and financial systems. The broader crypto market recovery also plays an important role in this story. During bear markets, development continues quietly behind the scenes. When the market eventually turns upward again, the projects that spent the downturn building strong technology often emerge with a significant advantage. Many observers believe Monad is positioning itself exactly for that moment. By focusing on fundamental architecture improvements instead of short-term hype, the network may be preparing for a surge of adoption once market conditions fully improve. Ultimately, the race among Layer 1 chains is no longer just about launching new networks. It is about solving the underlying engineering challenges that prevent blockchain systems from operating at global scale. Speed, efficiency, developer experience, and economic incentives must all work together to create a sustainable ecosystem. Monade's superscalar pipeline architecture represents one of the most ambitious attempts to address these challenges simultaneously. If the design performs as expected in real-world environments, it could redefine how blockchain infrastructure is built for the next generation of applications. High-frequency trading systems, complex decentralized finance protocols, gaming networks, and large-scale financial platforms all require transaction speeds that traditional architectures struggle to deliver. A system capable of sustaining massive throughput without sacrificing security or compatibility could become an essential component of the future crypto economy. As the competition between emerging Layer 1 networks continues to intensify, the next few years will reveal which architectures can truly handle the demands of global adoption. Monade's approach to parallel execution, hardware optimization, and ecosystem development positions it as one of the most intriguing contenders in this technological arms race. So the real question investors and developers are asking right now is simple. Are we witnessing the early stages of the next dominant blockchain infrastructure, or just another experiment in the endless search for scalability? Only time will reveal the answer, but one thing is certain. The parallelization war of 2026 has officially begun, and the networks that master performance will define the next era of the crypto industry. Thanks for watching. Hit like and subscribe for more daily crypto insights. Catch you in the next one. Stay crypto smart.